Geopolitical tensions in a light week. Happy Ching Ming Festival and Nature Day. I'm Ahura with you to see the most important data in a week ahead. While in Iran and Eastern Asian countries, respectively, the Nature Day and Ching Ming Festival with holidays on Monday and Tuesday in China, we couldn't enter to the second quarter with peace. The market will be still focusing on war in Ukraine, inflation concerns, and energy shortages. This week, we will not have too much data to move the markets. However, geopolitical tensions and central bank speakers will be important to see where this economy is going to go. Number 1. US trade balance. The United States has a geographical advantage and it is being far from other countries. This geographical distance made them to have less impact from this war. However, international energy price increase, which will affect the producer inflation, is enough by itself to increase the concerns. Also, with more negative effects on European and some other economies, it is expected to see the US exports increase and help the trade balance to have better conditions. It must be positive for United States dollar and stock markets. Number 2. Interest rate decision in Australia. On Tuesday, the next round of the central bank's decision will be started with the main question that should we choose the inflation or stagflation. Given the raised uncertainty on the inflation and economic outlook, the Reserve Bank of Australia is expected to keep the policy and interest rates unchanged, which is not in favor of Australian dollar. This week we also have the Federal Reserve and ECB minutes of their March meeting. Number 3. US ISM services. In March, the ISM services index is expected to increase to 60, up from 56.5 in February. This may not be in line with the geopolitical tensions. However, we know that the United States is one of the economies that has suffered the least from the war in Ukraine. But if it continues in the next months, it will be hit, especially knowing that the supply chain challenges are at their highest points since COVID-19 began. Number 4. Fed meeting minutes. More than anything else, more lies from FOMC members' plan to shrink the central bank's $9 trillion balance sheet will be more interested for the market participants. Regarding the interest rates after a 25 basis point rate hike in a March meeting, Fed officials, including Chair Mr. Powell, have shown that the rate hike can be even more aggressively. But we should not forget that the latest economic outlook should be more reviewed before any decision and expectation from Federal Reserve. Anyway, last Friday's NFP numbers can support the 50 basis point rate hike in the next meeting. And finally, number 5, Canadian employment. Unlike other developed economies, the Canadian economy is supposed to benefit from the oil price increase. Therefore, with increasing inflation and labor market, the Bank of Canada increased the rates by 25 basis points in its early March meeting. And now, with the expected positive employment data and unemployment rate down to 5.4%, we can wait for more tightening policies in the next BOC meeting. Actually, it can be positive for Canadian dollar. Thanks for being with us and hope this week is going to be an amazing week for you.